Welcome back to the deep dive. You've handed us the AI analysis for the morning session, and we're here to break it down for you.
That's right.
It is Monday, October 28th, 2025. We're looking at midday, exactly 12 p.m. Central Time, and we've got the data on the top 40 high-volume trades right here.
Yep, the full stack. And our goal today really is to cut through the noise, give you the informed perspective without you having to sift through everything yourself.
We're moving beyond just, price up, price down.
Exactly. We're digging into the trading signatures, the institutional footprints, especially at this critical midday point.
And the tools we're using, they come straight from the AI analysis, specialized metrics. That's what makes this different, right? We're quantifying conviction, efficiency.
Not just movement. We lean heavily on volume ratios. So not just total shares, but how does today's volume stack up against yesterday's, percentage-wise, and then hourly last hour versus the hour before? Where's the immediate heat?
And the big one, true value. We need to be clear on this. When we say over or undervalue, what's the comparison point? It's not just PE ratios, is it?
No, absolutely not. That's a key point.
Yeah.
Our true value is dynamic. It's measuring the current price against a baseline model that factors in recent volatility, sector risks, moving averages, a whole cluster of things. It's a calculated equilibrium, let's say.
So like a theoretical expected price based on recent action?
Pretty much.
Yeah.
So if we say 50% overvalue, it's trading 50% higher than that dynamic baseline suggests it should be. It flags stress, momentum extremes, maybe inefficiency.
Got it. Stress or extreme momentum. And we track that daily and hourly. Plus, we're watching buyer-seller direction, the 1-hour power trend, and those big technical levels, the 200-day and 200-hour moving averages.
Right. And looking at the whole list, the top 40, the midday picture as well, polarized. You've got some stocks hitting, frankly, absurd overvalue levels, massive volume spikes.
Like real outliers.
Definitely. But then the broader index ETFs, they seem more bullish, but, orderly. So it's this weird mix of localized frenzy versus broader institutional confidence.
Okay, let's dive into the specifics then. The volume titans. Who's leading the charge?
Top of the board, no contest, is Nokia. NOK, trading around $7.92.
And the volume.
Colossal. 181.3 million shares traded already. By noon. Just think about the capital deployed there. It's dwarfing almost everything else.
But it's the ratio that tells the story, you said.
Exactly. The daily volume ratio for NOK is 439%.
439%.
Yep. By midday, it's already traded over 4 times its entire volume from yesterday. It's not a small uptick. That's a seismic shift. Something big is likely happening news. A major fund moving.
Okay. And how does that volume relate to its valuation?
It backs it up. The AI flags NOK as 54% overvalue on the daily true value metric and 38% overvalue hourly. When you have that much volume confirming a 50+% premium.
That suggests conviction.
High conviction buying, yes. And the flow agrees. Daily buyer up, hourly buyer up. It's got the high trend signal, H trend. This looks like momentum with serious money pushing it.
All right. Next in line, volume-wise.
SOFI Technologies. SOFI, second highest, 109 million shares. But SOFI is a bit more complicated than Nokia.
How so?
Well, pre-market, its true value is actually 2% undervalue. Suggested some weakness, but then boom, it opens with a gap up.
So it defied the pre-market signal right at the bell, showed strength.
It did, but the internal flow is messy. The daily flow, aggregated since the open, is seller down, so net bearish pressure overall.
Good.
But the hourly flow, the last 60 minutes, that's buyer up.
Ah, the classic discrepancy. Dip buyers stepping in?
Exactly. Intraday reversal attempt. Heavy buying in the last hour, fighting against the morning's downward drift. It's a real tug-of-war going on there.
Okay, let's quickly run through some other big volume spikes, because those ratios are pretty telling today.
Yeah, besides NOK at 439%, you've got WULF, TeraWulf, right behind it, 390% daily volume ratio. Those two are just screaming for attention.
But some big established names too, right?
Definitely. Look at PayPal, PYPL, 310% daily volume ratio. And Eric, at 293%.
PYPL at 310%. That feels unusual for a name like that, doesn't it? Unless there's major news.
It really does. It's a mature tech payment company. That kind of volume acceleration usually means earnings reaction, M&A rumors, something significant. That level of capital turning over signals real urgency. Institutions notice when a big cap moves like that.
And a few others.
GLXY, Galaxy Digital, 236%. UPS, the logistics giant, 165%.
Yeah.
and SMR and Niscale Power, 142%.
Yeah. Seems like capital's moving decisively into specific stories today and doing it with volume.
Yeah, it seems like capital is moving decisively into specific stories today and doing it with volume.
Okay, now for the part that kind of breaks the mold. The true value extremes, where things get a bit wild.
Wild is an understatement for some of these. This is where you see short-term momentum just completely detached from any traditional valuation idea.
And you have to start with open door technologies. The number is just staggering. 11,188% overvalue. Daily true value.
1,188%, over 11 times its calculated baseline value. It's, yeah, almost surreal.
How does that even happen? What's the AI suggesting there?
Well, a number that extreme usually points to one of two things. One, a localized, maybe low-float event, like a massive short squeeze where buyers just can't find shares and the price goes vertical on relatively thin air. Or two, some truly game-changing unforeseen news has hit that completely invalidates the historical data the model is based on. But usually, it's the first one.
And the volume for open, does it support the squeeze idea?
It does. Its daily volume ratio is only 53%. It's generating this 1,000% premium on below-average relative volume.
So not broad participation, more like a technical dislocation.
Exactly. It strongly suggests low liquidity, maybe manipulation, or just a vicious short squeeze. It's a flashing red light for risk. Could keep squeezing, or it could collapse instantly. Very dangerous territory.
Makes the other overvalued names look almost tame.
Right. You look at WLF at 229% overvalue, APLD at 139%, RGTI at 162%. Still very high, but nowhere near Open's level.
And notice the theme there. WLF, APLD, RGTI, crypto mining, quantum computing related, speculative tech.
That's where the heat is. Clearly a risk-on appetite into those specific pockets today.
Okay, flip side, most undervalued. Where's the market seeing relative weakness or maybe safety?
Well, predictably, the inverse QQQ ETF, ACEQQQ, is down there at negative 18% undervalue. Makes sense if the NASDAQ is up.
Sure, what else?
Then you see more traditional names. HBN, Huntington Bank shares, negative 15% undervalue. TAT&T, negative 14%. CCL, Carnival Corp, negative 13%. RF, Regions Financial, negative 11%.
Banks, telecoms, cruise lines being left behind or used as a source of funds.
Probably a bit of both. Sector headwinds for banks, maybe, concerns about debt for TE, or just capital rotating out of value yield into the high momentum stuff we're seeing elsewhere.
All right, let's shift focus to the internal dynamics. The flow. Buyer versus seller, daily versus hourly.
Yeah, this is key, especially those discrepancies where the daily trend fights the hourly trend. That's often where you spot turning points or shifts in control.
Like seller down daily, but buyer up hourly. What does that signal?
That signals an intraday reversal attempt. The overall trend since the open might be down, but in the last hour, buyers have stepped in aggressively. Dip buying.
And we're seeing that in quite a few big names today.
We are. SOFI, which we mentioned, NVDA, WLF, even the leveraged semi-ETF, SOXL, IBIT, SMR, and the big indices QQQ and TQQQ2.
Let's use NVDA as the example. Daily seller down, but the last hour flipped to buyer up. What does that tell a trader?
It poses the key question. Is this bounce real? Is it sustainable institutional buying stepping in, or is it just shorts covering, maybe some retail trying to catch a falling knife, a dead cat bounce?
How does the volume help decide? NVDA gapped up, you said, and had high hourly volume.
Right. That high hourly volume combined with the buyer up slip adds weight. It suggests more conviction behind the reversal. If the volume was weak, you might dismiss it. But high volume suggests deliberate action, maybe accumulation on the dip.
Okay, what about the opposite? Daily flow looks strong, buyer up, but the last hour turns seller down.
That's a warning sign. It suggests distribution. Early buyers might be taking profits off the table near the midday highs, or maybe new short positions are being initiated. Caution advised.
Which stocks show that pattern? Buyer up daily, seller down hourly?
We see that in MRA, Rigetti Computing, RGTI, and Archer Aviation, ACHR.
So MRA, the crypto miner, strong morning but fading in the last hour.
Exactly. The daily buyer up shows it had a good run, but the hourly seller down says that momentum is hitting resistance now. Selling pressure is emerging, could be topping out for the day.
Got it. Now, for consistency. Stocks showing buyer up on both daily and hourly. Unanimous momentum.
Yep, clear sailing, directionally speaking. That list includes NOK, INTC, Intel, TSLL, the leveraged Tesla ETF, AMD, AAPL, Apple, and CIFR, Cipher Mining.
Intel, INTC, stands up there, looks solid.
It does. It's about 14% overvalue daily, 12% hourly, so elevated but not extreme like open. And strong, consistent buyer up flow. H-trend confirmed. Looks like genuine demand, less speculative froth.
Okay, what about stocks showing loading or neutral in the hourly flow? SPY and SQQQ are flagged that way.
Loading is the AI's term for consolidation. Price action tightens up, buyers and sellers are pretty evenly matched in that last hour, net flow is balanced.
So indecision, waiting for something.
Pretty much. Could be accumulation, could be distribution happening under the surface, but no clear winner in the short term. Traders might be waiting for the next catalyst data release, afternoon news before committing more capital. High indecision, basically.
Makes sense. And power trend. H trend versus N trend. Most big names are H trend.
The vast majority, yes. NOK, INTC, NVDA, WLF, QQQ, SPY. They're showing high trend. That means the move is relatively smooth, sustained, directional. Less choppy, lower whipsaw risk generally.
But then you have N trend, no trend, flagged on some really high volume, high move stocks like Open, RGTI, ACHR, MARA, RF. How can Open up over 1,000% be no trend?
Because trend here refers to the quality and consistency of the price action, not just the magnitude of the move. End trend means despite the big percentage change, the internal price action is erratic, choppy, full of oscillations. It lacks that smooth velocity.
So Open's move, while huge, is seen as technically unstable.
Exactly. It's likely fueled by sporadic bursts, low liquidity, maybe panic buying or short covering, not a reliable, coordinated directional move. Inherently unstable momentum, even if it's going up dramatically.
Let's look at the technical foundations now, those big moving averages, the 200-day and 200-hour.
And the big picture here for this list of top 40 high-volume names is overwhelmingly bullish from an MA perspective. Has an impressive 23 out of the 28 stocks we analyzed closely are trading above both their 200-day and 200-hour moving averages.
Wow. Okay, so the money flowing in today is generally going into stocks that already had strong long-term technical posture.
Precisely. It adds a layer of confirmation to the bullish moves and even some of the overvalue readings. These aren't just random pops. They're often extensions of existing uptrends.
But there are laggards below both MAs. Who are they?
Mostly the ones you'd expect given the other data. SQQQ, the inverse ETF, HBN, the bank, AT&T, PFE, Pfizer, and TSLY, the bearish Tesla single stock ETF.
And these align often with the undervalue readings, right?
Generally, yes. They represent sectors facing headwinds, or they're explicit hedging instruments. They're the counter-trend plays today.
We also saw some notes about stocks at the MAs. AAL, American Airlines, flagged as cross 200 days moving average.
Right. That means the price is literally sitting right on that critical long-term line. It's a decision point. A close above could signal a major bullish shift for AAL. Rejection keeps the bears in control. These levels act like magnets for institutional algos.
And Open was call 2,200 days moving average. CCL put 2,200 days moving average. What's that mean?
That notation usually relates to options activity or expected behavior around the MA. Calls suggest prices above and perhaps expected to hold or bounce off the 200-day MA, attracting call option interest. Put suggests it's below, potentially testing it as resistance, attracting put interest. It adds context to how traders might be positioning around that key level.
Okay, let's talk gaps. Pre-market sentiment translating into the open. Lots of gap ups.
Yeah, the market definitely opened with positive sentiment in key areas. Clear gap ups in SOFI, NVDA, BULB-ULF, PYPL, and importantly, the big index ETFs, QQQ and TQQQ plus SPY, also SMR and UPS.
The index ETFs gapping up really sets the tone, doesn't it?
Absolutely. It likely means many systematic strategies started the day in buy mode, reinforcing that bullish technical structure we see.
And the flip side, gap downs.
Predictable based on the gap ups. SQQQ, naturally. Then Ford F, American Airlines AAL, QuantumScape QS, Carnival CCL, Galaxy Digital GLXY.
That inverse action between QQQ up and SQQQ down looks pretty clean.
It does. Suggests the broad index mechanics are working as expected, even with those wild single stock outliers like Open.
What about stocks opening in range, no significant gap?
We saw that with INTC, TSLL, TSLA, RGTI, AMD, HBNT, AAPL. Quite a few, actually. For these names, their midday performance is more about the flow since the open, not driven by overnight news or pre-market sentiment, active accumulation or distribution during the session.
Okay, zooming right into the now, hourly volume flashes. Where's the money moving in the last 60 minutes?
This tells us about immediate concentration. We saw 4 names with an hourly volume ratio over 150%, meaning volume really spiked in the last hour compared to the hour before.
Who are they?
RGTI led the pack at 198% hourly ratio. QS right behind at 189%, both volatile tech names seeing a sudden burst. But maybe more telling is that the index proxies joined them. SQQQ hit 153% hourly volume, and QQQ hit 154%.
both the bull and bear index ETFs seeing huge volume spikes simultaneously in the last hour.
Yes. That strongly suggests significant coordinated institutional action hitting the broad market right around midday, maybe rebalancing, maybe reacting to some data point or news flow. It points to high conviction positioning on the index level happening right now. Midsection call to action.
Okay, that's a ton of data already, and we're only halfway through the analysis from the AI. The insights on volume, value, flow. It's pretty powerful stuff.
It really helps cut through the surface noise.
Absolutely. And if you're finding this deep dive valuable, if getting these AI metrics translated into clear market signals helps you, please take a second, hit that follow button, turn on notifications.
Yeah, it really helps us keep bringing you this analysis every day right when you need it. Make sure you don't miss the updates.
Okay, let's keep going. Now we need to talk about potential squeezes and anything the AI flagged as unusual activity.
Right. The unusual activity flag is basically the AI raising a hand and saying, pay attention here, something odd or potentially significant is happening.
Which stocks got flagged?
The list was NVDA, RGTI, QBTS, TSLY, and MRA.
QBTS, that's D-Wave Quantum.
Yep. And it's not just unusual activity. It also had a volume surge and is trading way up there at 114% overvalue daily. The whole list, NVDA, RGTI, QBTS, TSLY, MRA, it's a volatile mix, high-risk, high-reward names, likely seeing some intense internal pressure shifts.
And pressure leads us right into the squeeze metrics. Where's volatility getting compressed?
Looking at the daily squeeze count, it's actually pretty quiet overall. The market seems generally expanded on the daily time frame, only a few minor signals. INTC shows a count of 5. TSLA and TSL both show 14. QS has 3. MRA 3. Rivian 1. CCL 6. Nothing extreme there.
But the hourly squeeze count, it's different.
Very different, and it's heavily concentrated in one surprising name, PFE, Pfizer.
Pfizer, but that was one of the laggards, undervalue, below the MAs.
Exactly. And yet, it has by far the highest hourly squeeze count noted.
Yeah.
27. The next highest are RGPI and MRA, way down at 7 each.
27 hourly squeezes on Pfizer. That sounds significant. What does that imply heading into the afternoon?
It implies extreme compression. PFE's price action in the last hour has been incredibly tight, trapped in a narrow range, despite all the movement elsewhere. Think of volatility like stored energy. When it gets compressed that tight,
Yeah, release can be explosive.
often, yes. Violent and fast. So this flags PFE as having a high probability of a significant breakout or breakdown move in the coming hours. The direction isn't guaranteed by the squeeze itself, but the potential for a sharp move is very high. That energy has to go somewhere.
Okay, context is key. Let's compare some related stocks and ETFs. Start with the big index inverse pair, QQQ versus SESQQ.
Yeah, and the data lines up almost perfectly, just mirrored, QQQ.
Yeah.
Gap up above MA is about 6% overvalue, daily hourly, strong buyer up hourly flow, and that big 154% hourly volume spike. Textbook bullish index momentum.
Hence QQQ.
The exact opposite. Gap down, below MAs, around 18-19% undervalue, seller down daily flow, and that near identical 153% hourly volume spike.
The fact that both saw that massive simultaneous hourly volume spike is the real tell, isn't it?
It really is. It shouts, major institutional activity. Big players making significant bets or hedges related to the NASDAQ 100 right around midday. High conviction action.
Okay, shifting to tech and semis. Comparing NVDA, AMD, and the bull ETF, SOXL.
Signals look strong across the board there. All are overvalue, all above their MAs.
And importantly,
Both NVDA and AMD showed that critical internal shift we talked about. Seller down daily, flipping to buyer up hourly.
the dip buying confirmation.
Right, suggests accelerating accumulation in the key semiconductor stocks. And that provides strong underlying support for SOXL, the leverage play, which also saw that buyer up hourly flow emerge. This sector is definitely participating in this midday strengths with conviction.
Lastly, that really volatile group. The crypto-adjacent stocks, Emera, CIFR, IBIT, GLXY, Whale FF.
Yeah, this group is defined by sky-high implied volatility ranks, or IV ranks. That metric basically measures how much price swing the options market is expecting.
And the numbers are big.
Very big. WLF 109%, MERA 114%, GLXY 104%. But CIFR, Cipher Mining, tops the whole list we looked at with a 167% IV rank.
Whoa. So the market expects massive moves in these names.
Absolutely. Options are pricing in huge potential swings, which makes them expensive to trade.
And the true value metrics justify that expectation.
To some extent, yeah. Well, ULF at 229% overvalue, APLD, another related name, at 139%, and CISR itself, despite that insane IV rank, is showing strong buyer upflow and trading heavy volume 19.3 million shares.
So even with the perceived risk, capital is still chasing these assets aggressively today.
Seems so. High risk, high potential reward seems to be the theme in that corner of the market. Okay, so pulling it all together, synthesizing this midday data dump, what's the main takeaway?
It really feels like a two-tiered market today, doesn't it? Bipolar, like you said earlier.
I think that's right. You have one tier driven by, let's call it institutional momentum. Names like Intel, the index ETFs, they're showing bullish structure, H trend, consistent buyer upflow, often confirming existing technical strength. Reasonably orderly.
And then the other tier.
Pure speculative frenzy, concentrated in a handful of names, driven by mind-boggling volume ratios, or resulting in almost unbelievable overvalue readings.
The key difference seems to be volume confirming the move, or not.
Exactly. Look at Nokia again. Highest volume, 439% ratio, backing up a 54% overvaluation. That feels like broad participation driving momentum. You have to respect that, even if it's elevated.
Versus open, 11,188% overvalue, but on weak relative volume, 53% ratio.
Totally different signal. That's Cream's anomaly, low liquidity, maybe a squeeze. It's not broad conviction, it's a technical dislocation. The risk profile between NOK's move and Open's move is night and day, despite both being up.
We also shouldn't ignore the quiet movers, right? Stocks holding overvalue status, but without the crazy volume spikes.
Good point. Like TSLA, only 45% of its average daily volume traded so far. Yet, it's flagged H trend, consistent buyer upflow. That suggests quieter, maybe more efficient accumulation happening without drawing excessive attention. Less frantic buying.
So the market is sending very different signals depending on where you look. Requires being selective.
Extremely selective. You need to understand if the signal is momentum backed by volume or an anomaly driven by scarcity or speculation.
All right, as we wrap this midday analysis and look towards the afternoon session, what are the absolute key things listeners should keep on their radar?
Two things jump out immediately from the data extremes.
Go on.
First, that unbelievable 1,188% overvalue on open. Will it continue to defy gravity, or is a sharp correction inevitable? That's a powder keg.
And second?
That massive hourly squeeze count of 27 on Pfizer, PFE. Such extreme energy compression almost guarantees a significant price move is coming soon. Breakout or breakdown, watch that one closely.
So potential fireworks at both ends of the spectrum, extreme overvaluation and extreme compression.
Prepare for volatility. The setup is there for a potentially very active afternoon and close.
It really shows the value of digging into these AI-generated metrics, doesn't it? Getting beyond the surface price.
It helps identify where the real pressure points and conviction lie.
Absolutely. And if you found this breakdown helpful, if you appreciate getting these insights delivered clearly, please do hit that follow button, turn on the notifications.
Yeah, we put this out daily, and hitting follow ensures you get the analysis as soon as it's ready. Your support keeps it coming.
We'll be back to synthesize the closing bell data for you.
Looking forward to it.
Until then, trade smart, stay informed, and we'll catch you on the next deep dive.